Now, the state of the economy in Greece has not made it popular with investors in recent times, obviously, but expectations are now increasing on the back of a rally in Greek bonds and improved confidence. The country's prime minister is trying to get the world's second biggest economy, China in particular, to see Greece's potential.
Greece and China are perhaps like David and Goliath when it comes to economic strength. But there's no animosity between the two countries. This David is after help. The Greek Prime Minister Antonis Samaras is on a 5-day state visit to the world's second-largest economy. He has state assets to sell, including 3/4 of the port of Athens. Chinese shipping group COSCO, already a Piraeus port investor, is considering spending a further €1 billion. And it seems it's not the only investor looking at Greece. The country's bonds have rallied this week, and hedge funds are reportedly starting to look at Greece as a potential money spinner. Michael Hewson from CMC Markets.
The economic environment in Greece remains extremely difficult. Having said that, some of the assets in the Greek stock exchange were probably extremely oversold, so you're essentially going to get some form of a bounce back. You've also got this search for yield, and Greek yields are very, very attractive given the fact that we've got the ECB basically in full-on easing mode, talking OMT and essentially acting as a backstop for Europe.
It might be hard to be optimistic if you're one of the millions unemployed in Greece and struggling to feed a family. But Fitch and Standard & Poor's both lifted Greece's credit rating this week, giving the bailed-out country a fillip of sorts.
With the lack of very sort of attractive assets out there, then I think investors are taking the view there's yield there, let's go in, we can get some upside from it, but we need to be nimble and get out if the economic outlook deteriorates. And I think that's essentially where we are. And obviously the Fitch upgrade earlier this week has certainly helped on the margins, but let's not forget, Greek bonds are still junk, they're just less junky than they were before.
The Athens Stock Exchange rallied to its highest level for 2 years after the upgrade. There's even talk of Greece issuing bonds next year, a prospect even Samaras would probably have considered highly optimistic not so long ago.